There are two different insurances in this world, all starting with performance. Performance warranty insurance and performance guarantee insurance. And it's absolutely not the same. It makes the project also more bankable again, because if the lender knows that he gets paid, the bank knows they always will receive their money, why wouldn't they put money into the project? Examples of inherent defect could be delamination, bad soldering, but it could be a lot of other different things. The problem is it's a damage.
Hello, everyone. This is Rodriguez. I'm the Managing Director here at Sinovoltaics in Hong Kong. Welcome to this webinar. We give it another 1 or 2 minutes. I see there's still quite some people joining. And it's very special. Today we have no less than people from 48 different countries. And you can just see who's joining in. And there's a lot of familiar faces of people we would normally see at the conferences and exhibition in person. And of course, unfortunately, not to be able to meet each other in person, but I guess a webinar is a good way to connect as well. Yeah, we have people here from EPCs, developers, financiers. We have EPC from Germany, I see, India, Italy, Australia, Hungary, Bulgaria. I see here developers from the Netherlands, Spain, France, Jordan, South Africa, Ireland. There's financiers from the UK, UAE, and from here in Hong Kong. I see some fellow consultancies from France, Singapore, Italy, the Netherlands. And there's also a number of insurance companies from Germany, Japan, Singapore, and Hong Kong. Welcome, everyone. Isn't it amazing? People from 48 different countries. It really shows that solar is connecting people from all over the world. So my name is Rodriguez. I'm here together with our CTO from Sinovoltaics, Niklas Weimar. Also my colleague Benoit van der Maas, who's in charge of our business development. He's based in Shanghai, he's calling in. And today we have a special guest, and we welcome here Harry Wolkenfeld, who's our close partner and CEO at SolarRef. Harry, welcome.
Good morning, and thank you for your invitation.
That's our pleasure, Harry. Let's keep in mind it's not morning for everyone here.
No, true.
So, Harry, I will start with a brief introduction about you. I think a lot of people on the call actually already know you. You are considered a pioneer in the field of PV insurance. And it's a great pleasure to have you here and to have worked on multiple projects together. And just to give a bit of a background on you, you have a finance background. I know you work for several major banks, including ING Bank, and you've been head of stocks and bonds advisory, and at some point you were a director of private banking.
Yeah.
And over 10 years ago, I believe it was 2009, you made the remarkable move to start in the field of PV insurance, and this is where you founded company SolarRef.
Yes, I did. 10 years ago, I was in a cafe with two friends who were working in the solar industry, and they asked me to think in a creative way to create recurring business, and we came up with a service contract for installers and EPCs for their clients. Taking away all the risk, a one-stop shop, and they said, oh, but how are we going to do that, Harry? It's too risky. I said, well, that's why they have created and funded insurances. So we have to find an insurance company willing to take over that risk. And they asked me if I could let's say, arranged the insurance, and the same night in the cafe, I said, yes, I'm willing to do that under one condition. You become my first client and I will start an insurance company.
Well, that's quite a story. And here we are in 2020. You're the CEO of SolarRiff. You're headquartered in the Netherlands and known pretty much worldwide. You're insuring commercial and mostly utility scale solar energy projects. Yeah. And you have innovative solutions, and we will be talking about this today. Just to give a bit of structure to the webinar, we'll start off with a case study, a 33 megawatt project that we worked on together, and Niklas will give you a brief presentation about this. And after that, we'll give the word to Harry, who will speak about the different types of insurance products and a number of innovative solutions, so you'll be up to date on the latest developments. Maybe one of the most interesting things will be the questions from the audience. So when you have a question, please type it in the chat, and we'll see those questions. Now, we'll try to answer as many questions as we can. Some of them perhaps during the presentation, and most of them after the presentation has been finished. We'll try to answer all of the questions, but I'm not sure how many are going to pop up. So we'll just see how it goes. One more thing, there are handouts. If you like to learn more about SolarRiff or about Sinovoltaics, there's a company presentation in the handout, so you can download it. I believe you can find the slides there as well. So you have all the information later, and we don't need to mention too much about companies ourselves. So to start, our CTO Niklas Weimar, he will present a case study of a 33 megawatt project. And after this, Harry will explain about the latest developments in the PV insurance. So Niklas, please go ahead.
Okay, yeah, thanks for the kind introduction, and again, good day, good morning, or good evening to everybody here on this webinar today. As already mentioned by Drickus, in this first part of our webinar about insurance based on quality assurance, I'd like to present here a selected case study of our collaborative work with SolarRiff. In general, our objective is to turn project bankable and secure its performance. And as already mentioned by Drickus, this case study involves an order of 33.69 megawatt peak of solar PV modules produced at a major factory that everyone here on the webinar surely knows. Half of the order was produced at an OEM factory. This means we dispatched 2 quality engineering teams at 2 different factory locations. And an OEM factory is often a red flag because it's harder for a factory to control the quality when they subcontract production. Turning projects bankable and secure their performance means that we perform zero-risk solar inspections. So what does it mean? It means that we, and in this case study, also on this particular project as well, we've performed an inspection with the objective to eliminate any possible risk. The majority of inspection agencies statistically sample solar modules. So on a 33.69 megawatt peak project, they may sample a few hundred pieces, run tests, and determine if it's a pass or fail. Sinovoltaics takes a different approach. Our aim is to eliminate all risks, and we call this zero-risk solar. We use software tools to collect data and subject 100% of the PV modules to stringent inspection and analysis. There are various tests we perform on site. These include IV measurement, visual inspection, EL imaging, verification of raw material compliance to certifications, mechanical design compliance checks, and so on. The first important thing that we verify are the right or the compliant raw materials used on site. In this project, about 100 pieces were replaced because uncertified tap wire was used. And during the visual inspection, 1.7% of the modules required replacement. You can see here in this example photo a dislocated cell interconnector, which was the most common defect appearing during visual inspection. Other findings during the inspection included cell-inherent defects, such as this micro crack inducing V-chipping of a solar cell edge. Or in the earlier stages of the inspection, our team found modules with which were basically assembled with lower quality cells suffering from, you can see, striation rings and other impurities on the cell level. When you look at the data summary, a 33 megawatt project is nearly about 100,000 modules. To get the project to the right quality level, we replaced about 2% of the solar modules. That's nearly 2,000 pieces. And as a result, the project owner has a high-performing PV plant, and SolarWeave was able to insure that project. Harry, please go ahead.
Thank you. Okay. First, I want to say that SolarWeave Insurance is part of the SolarWeave Group, and in the SolarWeave Group we have 3 divisions. One is insurance, fully concentrated and focused on insuring solar systems worldwide. The second company is risk management, where we do all kinds of risk assessments, risk inspections to assure the quality of the project or the materials. And the third party is SolarWeave Matchmaker. It's like a real estate agency, but then we don't sell real estate, we sell PV projects in different phases. So today we're focused on our SolarWeave Insurance, the company with whom I started 11 years ago. Just to be stepping a few steps back, where to make sure that everybody understands that a park, the risk of a park doesn't start with an insurance. It starts with focus on quality in design, quality in the work, quality in the products chosen, and quality in the OEM. That has to be in place in the right way. That's how you, at start, make sure that you mitigate the risk and assure for yourself that you're working and that the work is focused on quality. The way you can do that, from our experience, is control the quality of the product by going into the factory, and that could be based on a factory risk assessment, where we go into the factory, we take 2 or 3 days, and we check the technical side of the factory, and we also look at the financial side of the factory. And if both assessments are subject to a positive outcome, then the panels produced in that factory become SolarWeave certified for a period of 1 year. What that means, I will tell you later the advantage of that. If a factory is not certified by SolarWeave, we can also certify the panels. So the panels itself become SolarWeave certified. And that's done on batch level through during production inspection. If that's not possible, then we can also look at a pre-shipment inspection where we check the panels already produced, but normally that will be in combination with a drone inspection. after the project has been commissioned. In some cases, depending on what is possible, we sometimes look at post-shipment inspections where we will do some checks of the panels after transport and before going into the construction. Also, construction supervision is a way as from third party to supervise the quality of the work during construction. Another way, at the end, technical commissioning is becoming more and more a must. In the Netherlands, it's even becoming a requirement. In the Netherlands, there's a new training called Scope 12, where in the future the bigger installations at commissioning have to go through this inspection. And if this inspection is not subject to a positive outcome, you will not be able to get insurance for your park. So, and the reason why is that insurers are still getting more focused on the quality of the installations and the quality of the products. As said, drones is more and more often taken into consideration as a way of, again, assuring the quality. An insurer is willing to take risk, but the risk has to be unknown and uncertain. So risk already in the park, and that's what the insurers are asking and demanding more and more, is tell us upfront when we start with the insurance, is the park okay? Or is there already risk in the park which we should know, and that has to be repaired or replaced before we start the insurance. Also, there's different ways of looking at in the future. When you have a more and more secondary market upcoming, then you also want to know as the insurer, is this park okay? Of course, you can do a technical commission, a technical DD, but there's always also a way of rate catch, an example of a software program working with big data and taking out the big data of the monitoring, because the monitoring doesn't use all the data. There's much more data gained by the monitoring. If you take all the data and you go back as far as possible, then based on this big data, you can come up with conclusions. And those are presented in a report saying this park, an existing park, has the following problems. And then you can find here quality claim history. And why I'm putting this direct here, because it's often not taken into consideration at a level where I think it should be. Once a park is up and running, it's good for the value of your park to register the claim history of a park as good as possible. So in the future, at a certain point, when you are willing to sell your park, then you already have everything together on the claim history, because that will be one of the questions. It's also one of the questions you will have and have to answer very clearly if you want to go from one insurer to another insurer. The first question would be, what has been your claim history in the last 5 years? And it's not about, oh, yes, we had a storm claim. Now, we had a storm claim. How big was the claim? And what have you done, if possible, to mitigate that risk of happening again? So claim history is often not taken too much in consideration, but I would love to have that changed and that people start reporting and listing their claims in a much better way. And it will make your life easier in the future, but it also will help you to sell a park in a better way, in a quicker way, the moment you have that in a good way registered. Insurance, back to the basic. Any insurance will start, and Solarif Insurance is focused on insurances of solar PV systems during two phases, the construction and the operation. And in the construction, you have the construction all risk insurance. And just there, I want to say there are two ways of getting it. You can trust your EPC and work with the insurance provided and arranged by the EPC, but it's also possible as owner, future owner of the park, as your SPV, to buy a construction all risk insurance. The difference in the conditions, terms and conditions of the insurance is absolutely no difference at all. But the difference is in the fact that if you have taken out the insurance yourself and there is a claim during the construction phase, this claim will be paid out to you, meaning you will receive the money, not the EPC or the installer. That means you are in control because you have the money on your bank account and you can put more pressure to get the problem solved. That's, I think, for today, the most important part of realizing that a construction all risk not always have to be with the EPC. During the construction and operational phase, you have also a liability, a third-party liability that has to be arranged. In the construction or risk insurance, it's possible to arrange a liability insurance as part of the construction or risk, but there are certain gaps. So it's better as a company to take out your own liability insurance on company level, because the insurance provided by liability insurance on company level has a much more comprehensive cover than the liability insurance included in the construction or risk. Once done the construction, then we go into the operational phase. And in the operational phase, you take out an operational all risk insurance or a machinery breakdown insurance. But all comes back to two things. It covers the material, some call it material damage, the other calls it property damage, but it's simple. For example, there's a fire and the material, the installation is damaged. That is a material damage or a property damage. And once that is done, your system is not producing any electricity. That could be called business interruption, machinery interruption, or you could also call it production loss. But you're losing money, so it's two things which need to have to be taken care of: the damage of the material and the installation, and the consequential losses in. And one part of that is business interruption, so you can be able to pay back your investors and your lenders. On the operational all risk, it's possible to add inherent defect cover, but this is a part of the cover where we will come back later in this presentation. But just upfront already, it's really good to see what, if you go into inherent defect, what kind of sublimits are there. Is the inherent defect covered up to, for example, 2.5 million, or is it covered up to 20 million? Is it covered, but there is a serial loss clause, meaning the first damage is paid up to 100%, the second damage is paid up to 75%, the third one for 50%, the fourth one for 25%, and from your fifth claim, nothing is paid anymore. That's called a serial loss clause, and it's really important to look in your policy, in the little letters of your policy wording, if a serial clause is inside your policy. It will reduce your cover. Also, when you go into a project, it's really important to get the insurers involved in a much earlier moment of development. When you are starting to develop, it's 1.5 years, maybe 2 years, and then the project is going to be constructed. But also, if you go into a country where it's a development for you, it sometimes could be also a development for us as an insurance broker. You have rules, local rules. There's time needed to get everything in place. You might need to work with an insurance broker. You might need to work with a local insurer issuing the policy. You might even need to work with the reinsurance of the company, of the country, to get a part of the cover reinsured by the country reinsurance company. So there's a lot of things to be considered. And if you think that sometimes that can be done in 2 weeks' time, it's impossible. For you, it's a development. For us, it's sometimes also a development. So we also need time to get us involved in an early moment, gives us the time to arrange the insurance in the best possible way, but also to take in consideration certain decisions which make the insurance better at the end, maybe even cheaper. But if you wait until the end, then those kind of solutions cannot be taken into consideration anymore because everything has been decided already. So up to the next sheet, performance. There are two different insurances in this world, all starting with performance. Performance warranty insurance and performance guarantee insurance. And it's absolutely not the same. Performance warranty insurance, the word says mainly all. It's an insurance backing up the warranty, the performance warranty of the panel. Here, sometimes you can find, let's say, two different ways, all presented in the same way, but it's absolutely not the same. A company, a panel manufacturer could say, yes, we are insured by Munich Re or Aria Re or Swiss Re, Hanover Re. But the question is, what is insured? And the answer should be, is the manufacturer insured or is the project insured? So if the manufacturer is insured, then the manufacturer has taken out an insurance to cover himself. So if he has a lot of claims on his warranty, he will pay those claims, turn around, go back to the insurer, and will get paid because he's protected himself. The insurance is taken out by himself. It's paid by himself, meaning in case the panel manufacturer would go bankrupt, the insurance is terminated. So there is no cover for any client. The insurance covers the manufacturer. So is that a bankable? It helps to become a little bit more bankable, but it's not the best possible way. So better is to work with a panel manufacturer who has taken out a performance warranty insurance as company, but can appoint the insurance to projects. Unfortunately, these projects have to be, let's say, a minimum of $1 million. But once it's appointed, it's the same kind of cover. But if the manufacturer goes bankrupt, in that case, the insurance is transferred, the cover is transferred to the owner of the park. So the cover stays in place. And I personally think that's the better solution. And it makes your park much more bankable. About bankable, there are words like, okay, an insurance can make a panel or a project bankable. It's true, but not with all the insurances. So it depends on what you use. But the bankability is never, ever decided by an insurance. It's decided by a bank. That's why it's called bankability. So everything you can do, insurance, assuring your quality, insuring your park with the most comprehensive insurance available, it will help you to become bankable. It doesn't make your project bankable. There's only one exception. That's the performance guarantee insurance. That's where an insurer says, I will guarantee your return on your system. So what is the risk of everybody involved? The engineering who did the work, the EPC who did his work and in installing the installations, the products chosen, the O&M doing his work or not doing his work. So In this case, you have two insurances. You have the insurance, the operational risk, covering everything what comes from outside, could even cover the inherent defect with everything in it and the business interruption. And if you add a performance guarantee insurance to it, where this insurance guarantees the return on non-material damage like lack of sun, bad installation work, wrong engineering, the O&M not being done properly, those kind of issues, you combine that, then you have secured your return. And because of that, an A-rated company, an A-rated insurer saying, okay, I will guarantee the return of this system. In that case, everybody involved with this park has become bankable. And I think that's the only product which really makes a full project bankable. But both insurances, the performance warranty insurance and the performance guarantee insurance, it only makes sense if your park is 15 megawatt or bigger. The reason why, there's a minimum premium, and that's about 150,000 euros. So it doesn't make sense on a smaller park to buy one of these insurances. It will cost you money. So, and that's not the purpose of an installation. The installation should, well, you should gain of the park, of the cash flow. So, to the next one. Oh, sorry. These are new projects coming into the market and called Lenders Protection Insurance, a PPA Protection Insurance. It's also called the Frustration Insurance. But to bring it back in a very simple way, it just says, okay, every non-payment for what kind of reason is covered, is protected by the insurance. Let's take the Lenders Protection Insurance. So the lender has given you money and he gets interest rates back and payments, installments. So if one of these doesn't happen for what kind of reason, the insurance steps in and pays the amount of money to the lender. These kind of insurances both can be taken out for a maximum period somewhere between, let's say, 10 and 12 years. And there has to be some guarantees behind it. But it's expensive insurances. If you go and look at these kind of insurances provided by, for example, MIGA, the insurance company of the World Bank, then insurances of the premium could be in the same range or a little bit higher. The big advantage of taking these kind of insurances out with another kind of company, most of the times reinsurance companies, is that the decision taking takes less time than with MIGA, and often it's also a little bit more cheaper, and the cover could be a little bit more comprehensive. So the PPA protection insurance is from, okay, the off-taker has to pay the SPV for the electricity taken out. If the off-taker is not able to pay, then there's a problem. The insurance, in that case, steps in and protects these payments. So also here, again, protection of the non-payment from the off-taker to the SPV. In most cases, these insurances are arranged in a way that it's for the full period, so it's non-cancelable, but the premium then, in that case, is paid upfront as a one-off premium. It makes the project also more bankable again, because if the lender knows that he gets paid, the bank knows they always will receive their money, why wouldn't they put money into the project? So back to the inherent defect. This is a cover we often use together with Sinovoltaics, where we ask them to do the inspections in the factory on the panels during production. And what does this cover do? It's, first of all, it's a cover which is in addition to the operational risk. So it's not possible to buy this cover as a standalone cover. It's only possible in addition to the operational risk, the one we already discussed earlier in this presentation. Examples of inherent defect could be delamination, bad soldering, but it could be a lot of other different things. The problem is it's a damage. And this damage comes up during operational phase, but it was created during the production. So it was established in the factory, but it shows up during operation as a damage. So in that case, you first have to go back to the factory. There is still a warranty in place. So go back to the factory, and in that case, you get new panels. But who pays for the replacement, for the labor? Who pays for the consequential losses? You might need scaffolding. You might need all kinds of things to get the damage repaired. You also have business interruption. So the inherent defect will, in that case, protect you and pay out the cost of the additional cost of replacing the panels, but they will not pay for the panels. They only pay for the panels as well if you go back to the manufacturer, but the manufacturer is not there anymore. They're bankrupt. In that case, it also stands up and acts as an insolvency cover. So manufacturer is not there anymore. In this, you have delamination as an example. In that case, panels will be replaced and paid, and all the labor costs, the business interruption, and other consequential losses are paid by this additional cover to the operational all risk. Are we going to provide this standard? Absolutely not. A requirement is a DUPRO inspection, a batch inspection. But also this inspection has to be subject to a positive outcome. As explained by Niklas in his case, if panels are found which are not up to our standard, these panels have to be replaced, which is easy because you're already in the factory. They just have to start keeping on producing until we have the amount of panels who fulfill our requirement and makes us happy and makes also our insurers happy and willing to accept that risk. So how long can this inherent defect cover stay in place in addition to the operational risk? We're willing to take that risk for a maximum of 20 years. After 20 years, this cover terminates. Well, not the whole risk, of course, that can keep on going, but the inherent defect cover is terminated. If the manufacturer goes bankrupt in the meantime, the insurance stays in place. Why? Because the insurance has been provided based on quality. And that's something else than based on tier one, where tier one is not focused on quality. It's something totally different. So that's on the financial side. We're looking at the quality side because we have to protect our insurance for too much risk. And that's what we're doing through the quality inspection.
Harry, if I can interrupt you about this, this is an interesting point. You mentioned tier one. You say it doesn't always correlate with quality modules. We all know there are hundreds of solar module brands and factories out there. Are you able to insure
yes.
any brand, or is it only the Jinkos and the Suntechs and the Yinglis and the Trinas of the industry?
No. Again, we don't focus on only big names and tier one. We focus on quality. So we don't look at it's tier one or tier two or tier nothing. You know, give me quality so that I'm convinced that this installation will probably have no problems. And if it has a problem, that's why you have the insurance then.
You have major players and they're known in the industry. But one brand, a large company, can have 8 different production locations, including OEMs where they subcontract the work. So it's not always a given that
yes.
the quality is stable. So sometimes you find a medium-sized factory that has better control. Yeah, better grip on the quality.
Yes. So if we certify, for example, a factory, we're not certifying a brand. Indeed, a brand could have 10 factories. We're not certifying the brand and all 10 factories. We're certifying a factory. More specific, we're certifying a specific workshop in a factory. That low we can go. Yes, because indeed the quality in different factories, they differ, and we want to work with the ones who are producing panels who meet our requirements. Yes,
Harry. Maybe we can throw in another question because it was asked a while ago. Let me pull it up. Here's the question. The question is if your insurance products are available globally.
It's available globally, but the projects need to be, let's say, 20, 25 megawatt, depending on the country, if it's outside Europe. Inside Europe, we're able to pretty much insure any size of project. But outside Europe, it gets more difficult because of what we have discussed earlier. All kinds of local requirements come up. You might need to have a local fronter, all additional costs which have to be made to ensure this and to provide this kind of cover through an international insurer makes it more expensive, meaning you need a bigger installations to make it worth.
Okay, that's clear. So Europe, any size,
yes.
Outside of Europe, 25 megawatt and up. Okay.
Yes.
Please continue.
Okay, good. Okay. So the inherent defect cover, you could say, does two things. It supports the warranty of the manufacturer for the cost not paid by the manufacturer, because normally you only get panels and all the other costs are for the owner of the park. Or it's an insolvency cover. The moment that you have a problem and the manufacturer is not there anymore, the insurance takes it fully. So that's the inherent defect cover as an additional cover to the operational risk. So in a summary about this short workshop on insurances, focus on quality. That's where everything starts. Sometimes I say the best insurance is not an insurance, it's a working system which does what people expected it should go. It should do up front. Mitigate the risk through quality controls and inspections. It's becoming more and more an important part of the business. And once you have that in place, and you have eliminated risk in that way, then the remaining risk, we have to look, how can we take that away by insurances? So an insurance, please people, remind, and it's not about the premium paid. You have to look really into the little letters, into the terms and conditions, what is covered, and that really makes a difference. The insurance premium is a small part, so that will not make a huge difference, but what's covered, that makes a difference. Thank you. Any questions?
Thank you very much. Yeah, if you want to reach Harry, his details are here. And as I mentioned, if you haven't downloaded the handouts yet, you can find all the background information about SolarRiff in the handouts. Yes, let's. Anyone who has questions, please type the question in the chat function, and we'll be able to see the questions. Let me see. There is a question here about a specific defect. Let me pull it up. This is about PID. The question is if an inverter takes more power from the negative side, thus creating a potential PID problem, how to insure such a problem? So how to insure yourself against the risk of PID?
No. PID is not possible to insure. You cannot insure yourself against PID. That's a simple question. A simple answer.
Yes. So the best would be to make sure when you buy the module that you make sure that the module materials, the materials that are used for the manufacturing of the product, have been extensively tested on PID. Niklas, maybe you can share a little bit about PID certification in this sense, because I'm saying PID certification, but I believe PID certification doesn't even exist. Is that correct?
We have basically, we have of course standards that have been worked out in the past few years. Most famous, of course, the one from the TC82 working group. So it's the ICTS. So it's testing specification, basically 62804. So I just don't bore you with the names, but the essence basically is that this standard, or this procedure basically does not specify a pass or fail whatsoever. So in the end, it's basically you submit modules, or as a manufacturer, you submit modules to a laboratory that basically can the test against that standard, and then you basically have for that specific module you have like a test report. But some may probably then put like something like anti-PID or so on the labels, but in the end, it's subject basically to to internal basically pass and fail criteria, and in the end it's not a full anti-PID so to say assurance basically. So it's not a certification or qualification standard per se. It's just basically a testing specification, and you have similar or variations of that from bodies such as TÜV Rheinland and TÜV Süd. They have their own like 2PFG or triple P basically variations of PID testing. So there's a couple of different factories that apply. They use different laboratories or certification bodies to test against this. So you should also, of course, there's something to look into what has been, to what kind of PID or what kind of PID conditions a model has been subjected to. Yeah.
Okay, I see lots of questions here. Harry, get ready. Let me see. Question here: in case a defect of a company, bankrupt case, and you find problems with solar modules, are you scheduling to change solar modules or not?
If there's a defect, and it's an inherent defect, and the manufacturer is bankrupt, then we will not start scheduling to replace the panels. We, of course, will handle the claim. Once the claim is accepted by the insurer, then we will tell the client to start arranging a company to replace the panels on behalf of the insurer, and the invoice is sent to us, and the insurer pays the invoice. And if needed, in between, some in discussion with the insurer, sometimes in between installments can be made already to pay a certain amount of the claim.
Okay, that's clear. Next question. This question is about different technologies. Are you able to insure any technology? Thin film, silicon crystalline modules? Well,
let's say, for example, thin film and bifacial heterojunction N-type panel. So both, let's say, two for banks, more new technology, even if it's not new, but for them it could be new, or they see it as a different. And they could say, we're not willing to finance that, we're unknown, it's an unknown brand, it's an unknown technology. And we, in both cases, for example, in Europe, the biggest bifacial N-type heterojunction park is 12 megawatt. It's built with panels from Jollywood. and we were able to convince a bank to finance this project. The same we did with a project of 10 megawatt with Hanergy Solibro panels, which is thin film. By the way, bankrupt at the moment, but still insured by us through the inherent defect. And how we got that in place is we have to do more than only a batch inspection. So it starts with a factory inspection, and then we go back to a batch inspection, and then through the batch we also take out panels and we bring them to a lab and we do some lab testing. And all these different inspections, they all have to come back with a positive outcome. So it's not only based on a DuPro inspection, it's much more broader to be able to convince the insurer on new technology or different technology to take the risk, because we can show through different kind of reports that the quality is at a standard they expect. So yes, it's possible.
Okay, then I have another question here, which is about the cost of insurance. Here it is.
Yes.
What is the insurance amount as a percentage of the project cost?
Well, I assume because insurance, there is, let's say, at least 100 different kind of insurances. So what kind of insurance? But if you look at the inherent defect, and that's the specific subject of this workshop today. If a panel is used, which is Solaris certified by factory or by batch inspection, the additional cost on top of the operational risk is 0.045%. So let's say 450 euros per million, million being the capex value.
Okay, that's crystal clear.
Yes.
Let me see. Another question. Is the insurance to be renewed every year or else?
Well, it depends again here on the kind of insurance. An operational risk, inherent defect, everything on project level is normally a cover on an annual basis. So that's renewed every year. But if you buy, for example, the PPA or the lender's protection insurance, then it's a one-off premium upfront for the period of what you have agreed. That could be 8, 10, or 12 years, and then it's non-cancelable, but you pay the premium upfront.
Okay.
So it depends on insurance.
Yeah. Okay. A question about the, well, I'll pull it up. Is it possible to ensure the PV yield production or a performance ratio? You already spoke a little bit about it.
Yes. Then you go into the performance guarantee insurance, and then you are covering this. So yes, it is possible. But the performance guarantee insurance is the most comprehensive insurance you can have, in the sense of protecting your return, your earnings. So this insurance is only possible if you get the insurer involved in a very early stage, because they want to have an opinion about the engineering. They have their opinion about the EPC chosen. And they might decide to say, well, we agree on everything, we agree on the products used, but that EPC, sorry, we're not going to go ahead if you use this EPC. Or if you use this EPC, we judge that one as more risk for us, so you will have to pay a higher premium. So you have to take, if you want to go into a guarantee insurance, what we're talking about now, you have to take us and the insurers into the process as quick as possible. Once you have started your construction, this insurance is not possible anymore. You cannot buy it.
Okay. Okay, that's clear. I'm gonna pull up another question. Does SolarRiff offer coverage for floating PV projects?
Yes, we do. We have already insured 3 projects in Belgium, the UK, and the Netherlands. And we are involved with several floating systems at the moment. The biggest at the moment is a 25 megawatt being developed. We've been approached by a lot of floating PV structure companies to say, Harry, help us to become, let's say, insurable. But floating is something totally different. When you go into floating, other kinds of risk appears. So you have to think about, okay, what is the location of where I'm gonna put my system onto the water? Is the water still, or is it really streaming water? Is the water low, like it's just 1 meter deep, or is it 20 meters deep? Is it a river? Is the lake? So and how does the wind come into the installation? How is the floating system attached to the ground? Are you putting your inverters or central inverters or whatever on the system or on the land? So a lot of questions come here with totally different risks which have never been before in a park. So floating is a really specific, different kind of risk.
Yeah.
And also a risk unknown by insurers. So this is also a really important one to get us and the insurers involved in an earlier stage to be sure that you can build the park the way you want to build it with the structure you want to use.
It's a very interesting question and an interesting topic overall. From the quality perspective, we've been involved in several projects as well. And what we see is that, that there are very high requirements on the type of materials used for the construction of solar modules. So the actual bill of material, of course, you could take a standard module and just install it on the water surface. However, there are ways to make a product more durable, less affected by corrosive forces. There are installations on drinking reservoirs where certain materials cannot be used.
Yes.
It's a big topic. So from a quality perspective, there is also certain things to keep in mind. But I suppose it would be a webinar by itself.
So I really believe there is not one system which is which you can use on any kind of water. You really have to look at the location, and because of the location, decide which structure you're going to use. And also you have to take into consideration regulations, rules from different countries. There are countries where you are not allowed, for example, to cover the surface for more than 80%. So, and then you cannot have, you have to have an open structure.
All right. Okay, there's a question about inverters. Hi there, nice to meet you. This comes from Antonio. He would like to ask if an inverter, as an inverter gets damaged, it's in the warranty, and do you turn it back to the manufacturer to replace it? Can your insurance insure it for the unavailability to produce power? Okay, so there's a loss in production. Can he insure himself against this?
It depends on what kind of insurance do you have on it. If you just have a normal standard insurance covering damage due to external disaster, for example, lightning strike hits the inverter, yes, the unavailability to produce power, meaning you have a loss of production, you have a loss of income, you have business interruption, that will be covered. But if it's an inherent defect and you have not taken out an inherent defect coverage on the inverter, then you do not have business interruption covered. So and that's the things you have to look at during your development. It's who will be my future lender? Who will be my future investor? And if you can fulfill their desire, their requirements, then you will get money. And if you get the money, you can really build your project. So it's not like, oh, what kind of insurance do I need? it really starts like, what is the insurances required by the lender and by the insurer? If you get that in place, you know you're going to get the money, you can build the park. And these kind of things, that should be decided up front. Because again, if you've already built your park, you've chosen for a certain inverter, and that inverter cannot be covered by inherent defect, then business interruption is also not covered.
Okay, that's clear. Okay, I will just continue because there's so many questions. And there's still a couple very interesting left, so I'm just gonna ask them to you, Harry. May you provide insurances for C&I projects, 3 to 8 megawatt rooftop, and residential projects, total 15 to 20 megawatt a year, average 3 to 6 kilowatt? Of course, there's lots of companies who do these kind of installations.
Yes, we do these kind of installations on a daily basis, because we are a company, Solarif Insurance. The only thing we do is insuring solar systems. So and as a broker, we're doing that every day. So yes, this is possible. But it also depends on, again, if it's outside Europe, 25 megawatt or bigger, then this would not be possible. But in Europe, yes.
Okay. Then I have a question here for Niklas. The question is, what are the important parameters to test at the factory? Maybe you can give a brief idea about this.
Parameters, I suppose the question is like what things we look at, right? Or like what tests we perform. Yeah, so I put it already in the case study. So there is, I mean, our approach is zero solar. So in that scope, of course, we attempt, of course, and we strive to make the project basically, or the batch, completely risk-free. So this involves a range of tests that already are performed at the factory level. So it includes basically monitoring the whole production process from start to the end. And during that production process, we look at parameters, for example, that the compliant materials are used. So compliant means basically certified materials, certified to the construction data form, or basically a construction data form. In some cases, it's also about agreed engineering norms, so to say, but it's mostly CDFs. Then, of course, we look at the items such as the conforming setup of the measurement and the production equipment. So that means also the calibration. Is it also, does the whole production team adhere to the SOPs? Like, do they follow the quality management systems requirements that are laid out or that have been established at that factory, and so on and so on. And then, of course, there's sample testing during production, and there's testing taking place at the end of the production as well on the batches, plus and up to the full, basically up to the full, the full scope of what is being produced. So it entails visual inspection, it entails electroluminescence imaging, which is, as you have seen earlier in the image, looks like an X-ray basically of the module cells itself, power measurement. So there's a range of tests that are performed, a range of parameters we look at, and we, as already pointed out before and as explained by Dricke, so the scope is 100% really to basically de-risk the specific batch or the whole project, whatever is the scope of the insurance.
One more question for, I think this is for Sinovoltaics as well. Maybe I can answer this. So we were talking about replacing modules. When we verify 100% of the modules during production, there are certain replacements. What if the same panels are unavailable for replacement due to obsolescence? Or actually, maybe what this question means is that technology moves on, right? One day they're selling 340s, a year later they're selling 360s. Actually, we see this a lot in the industry. It's a real problem. You get some replacements, and they're different cell configurations, the different outputs. it's a real problem. You must have experienced it that well, Harry.
Yes.
I've heard dozens of clients that the factory, they, instead of replacing the modules, they give them some refund or a discount on a future order. That's their preference. Yeah, that's and then there's a gap in the installation, right?
Yeah. Well, here, let's say insurance says there's a damage and you have to bring the installation back into a working system as before. So if redesigning is needed to replace, let's say, a 240 by 350 panels now, then yeah, you have to make additional costs. So to make it able to place the 350 watt peak panels into the park, or we will help you by approaching certain companies we know who have these kind of panels still on stock because they're specialized in selling old-fashioned products.
Yes. Okay. We've been pretty much through our questions. Some are repetitive questions and some are very specific. You know, some questions I see here, they are, we will commit to answering them. We will simply come back to the people who answered these questions, and we'll answer them after the webinar. There's one more message I would like to share with you, Harry. Let me pull it up. It's a message from Simon. He says, passionate, polished, and professional as always, Harry. Thank you. So I guess that's a nice way to finish the webinar. It's it's very, very nice to have you on here, Harry. It's I think we already know that you're a true expert in this field, but from all the questions, I think people really got a really overall very good idea of what's possible nowadays in the field of PV insurance. Now,
well, there is even more possible than we have discussed today, but we had a time frame to discuss certain topics, so we're impossible to discuss all kinds of insurances possible and available in the market at the moment.
Yes. Let me just pull up your end slide, which has your contact details. So if you would like to learn anything about PV insurance, you know where to find Harry Wolkenfeld, CEO of SolarIF. That's all for today. Harry, thank you very much. Real pleasure to have you on. And everyone here, thank you very much for joining. We're hosting webinars regularly these days, so we will invite you for a next one within the coming weeks. And real pleasure to have you everyone on. And if anything, you know where to find us. We will be glad to speak with you. Wish you all a good day, and talk to you next time. Bye-bye.
Bye-bye. Thank you.
Visit Sinovoltaics.com to learn more.